use the restroom actually. So don't come sit down. No, thanks. Surprised there's no throw noise coming from the TV. All right. Hey everyone, how's it going? Thanks for joining us today with Lincoln Select, live with Lincoln Select. Today we have Holli Artz with us from People's Mortgage. Hello. Thanks for being here, Holli.
Thank you for inviting me.
Yeah, absolutely. So now is a great time to buy a house. Rates are super low, and maybe we can touch on that a little bit later on. But an amazing time to buy a house, and I know that sometimes there's some myths that out there that buyers might have, maybe things that would hold them back from making a home purchase. So our goal today is to kind of debunk some of those myths,
Right.
Put some of them to rest, and maybe give people some advice on getting pre-approved and point them in the right direction. So we'll kind of get started.
Perfect. Yeah, I feel like sometimes people hesitate or wait to apply for a loan because they're nervous or scared about the pre-approval process. And there's just so many new ways and options for getting loans. So
Absolutely. We've come a long way.
yes, we have.
Well, the first myth that I think a lot of people have or have heard is that you need perfect credit to purchase a home. So can you tell us a little bit about credit scores, what's needed, just anything to do with credit that might affect a home purchase?
Yes, absolutely. So you can go down as low as 580 with credit scores. For certain programs, conventional requires a 620. So there's lots of options and lots of different programs for all sorts of different buyers. We have first-time home buyer programs, VA loans, rural development loans that will go below a 620. So, and there are other things that go into play for that. There are things such as assets and things that kind of offset some of those credit challenges, or things that we can do to help build credit to get you there.
And that's one thing I love about you guys, is that you're willing to help buyers get to where they need to be with things to do with credit or maybe some debt that they have, things like that. And we'll kind of get more into the debt stuff too. But,
Sure, yeah.
Another big myth out there is that you need 20% down to purchase a home, which is absolutely not true. So tell us a little bit about that.
Absolutely. So that used to be the big thing, is that you had to have 20% down. Now you can get in with as little as 0% down. Rural development loans and VA loans, you can get in with 0% down. FHA is 3.5% down. Conventional even has programs now where we can get in with 3%. So lots of different options as far as down payment goes. There's also first-time home buyer programs too that help with down payment and closing cost assistance. So
Yeah, that's awesome. I know a lot of first-time home buyers, it's hard to come up with a lot of cash for closing, so it's nice to know there's a lot of programs out there to kind of meet people's needs. So, well, another myth is that your down payment is your only upfront cost when you purchase a home. So tell us a little bit more about that.
Right. So when purchasing a home, you do have to have your down payment, but there's also other things that go into it, such as your closing costs, which is the cost of doing business. So title fees, lender fees, recording fees, prepaids, which is paying for your homeowner's insurance up front, because you always pay for the home insurance a year in advance. Setting up escrow accounts to pay your taxes and insurance when they come due. So all of those things are factored in for what your total closing cost is, but that's where we like to educate our borrowers from the very beginning. You as an agent and us as a lender sit down and kind of explain those costs, so that way when we say you have X amount that you can spend, we're looking at closing costs and your down payment.
It's nice to know ahead of time so you're all on the same page, no surprises at the end.
Right.
So
And I
that's
typically
good.
try to overestimate, because I'd rather have you excited because you have a lower
Absolutely.
number at closing
Mhm.
than, oh my gosh, I had to come up with more money. So
Absolutely, absolutely. And even in certain circumstances, we can ask the seller to pay for those closing costs for you to minimize the amount of money you need to bring to closing even more. So that's definitely an option out there too. Another myth is a pre-qualification is the same as a pre-approval, and I know there's some differences there, so I'll let you kind of explain that.
yeah. So a pre-qualification is an application taken. The lender would just go off of what was provided on the application. When we do a pre-approval, we're looking at your income and your assets and the credit report in length, and making sure that we properly qualify you so that when you go under contract, we don't have any surprises. So a pre-approval is going to hold more weight than a pre-qualification. I don't know, as an agent, wouldn't you rather see a pre-approval versus a pre-qualification?
Absolutely. A pre-approval is just more of a reassurance from the buyer's end that they've been through some of these, what would you call it?
Verification process.
Yes.
Yeah, and there's lots of different things to looking at a pre-qualification. So, for example, a borrower that is self-employed, what you put in your pocket is very different than what you show Uncle Sam. So we have to look at those tax returns to make sure that it's done correctly. So that's part of the pre-approval process. We're looking at those tax returns to make sure that we properly are looking at your income correctly. Other things such as hourly employees. So somebody that thinks that they work 40 hours but their pay stubs are showing 38.6 hours per week changes our income to variable income. So those are things that we look into a little bit more closely to make sure that, again, the income is there when we go under contract.
Sounds good. Would you say that you guys do more pre-quals or more pre-approvals?
We do pre-approvals.
Okay, straight up pre-approvals.
Yeah.
Good.
It's just easier, and that way we don't have any upset sellers or buyers once you go under contract.
Awesome. I know that's stuff they're getting pre-approved.
Yeah. So there is truth to too many inquiries. So there's a difference between pulling inquiries, going to Target and Shields and wherever you're going, and just getting store cards versus shopping around for your mortgage. If you're shopping for a mortgage within 30 days and different mortgage companies are looking at your credit, it's looked at and weighed differently. So it doesn't hurt your credit to have a second opinion on your pre-approval.
Great. What if you have debt? I mean, a lot of people think that if you have any debt at all or any credit that you can't qualify to buy a home. So what are your thoughts on that? It kind of depends on everyone's situation.
It does.
Yeah.
And no debt is almost bad debt.
I've heard that before.
Yeah. So you have to have a credit history. They like to see a mix between installment credit and revolving credit. Good payment history. We're looking at a 24-month history, a trended credit too. So it is different than if you're going to get a car or a credit card. Your credit scores are different. The biggest thing is maintaining a good balance between credit and your income, or your debts and your income. So like on your credit cards, they want to see 30% less for usage. So what your credit limit is, and only using 30% of that limit.
Oh, I didn't know that.
Yeah.
Okay.
The other thing is, if you don't want to have credit or debt, a good thing to do to at least keep your credit score up and showing some consistency is get a credit card, use it for gas, pay it off each month. So just that good payment history is huge for developing a good credit score.
Great. How would you describe lending restrictions now as compared to maybe 7-8 years ago?
Things have definitely changed a lot. We're definitely not in the subprime industry anymore. We're taking a closer look at your debt to incomes. We're not going to let you go, to 57% or higher. We're wanting to look out for our borrowers' best interest. We're looking at your comfort level with your monthly payment, making sure that we're not exceeding the thresholds. They've gotten tighter on regulations. They're checking things more closely. So it's not a handshake and here's the money anymore.
Yep. Which is a very, very good thing.
Yes, absolutely.
Another myth is talking to a lender comes after choosing a home. So let's expand on that.
Right. It is so important to get pre-approved first. For the simple fact that what you think you can buy and what you're comfortable paying are two different things. And there are some online sites that you can put in your information and it'll spit out a number that they think is good for you, or what they think the payment is, but they don't know our taxes and our insurance and everything that's here locally. So just the other day I had a gal that put in an offer, they did everything online, and then they came to me, and then when I gave them their payment, they were like, oh, well, it's the same interest rate, but why is it more? Well, they didn't figure the taxes in. And Nebraska taxes are a little higher than some other places. So the payment was a shock. So those things are important to go over. And I guess when I pre-approve somebody, I want to make sure that we're talking about what you're comfortable paying each month versus what you qualify for.
Right. And I actually hear that more often, what people are comfortable paying rather than what they are qualified for. Most buyers I've worked with don't want to go up to their full pre-approval amount, which is good. I mean, they're being conscious of it. They don't want to be house poor.
Right. And I think the other thing, and you can probably touch on this too, right now the housing market is hot and houses are flying. You put it on the market and they're gone the next day. So if you're not pre-approved, the chances of you getting that house when you see it without a pre-approval letter are probably slim to none. Right. Just because the people that have done the work are going to get that house faster than the ones that haven't.
Absolutely. And I've heard a lot of heartbreaking stories about people that have found this perfect house and go to get pre-approved, and it takes some time to get the pre-approval, and the house is gone. So definitely want to get that pre-approval in hand before you start looking seriously. Right.
And you don't want to look at a house and fall in love with it and then find out that you need to be $50,000 less, because that's a huge difference in what they're going to find in the housing market. Right.
I mean, if you're looking at a $150,000 house versus $200,000 house, you're getting two very different things. So definitely good to go check in, get pre-approved with the lender first before you start looking.
Right.
So, and us as agents also like that as well, because then they're kind of ready to go. We're ready to go, and let's go find your dream home. But if they're not, then we have awesome lenders like Holli that we can refer them over to. So I know that's one thing I do with buyers is I really encourage them to get pre-approved before we start looking. That's kind of one of my requirements that I do now. Just something that I've learned over the years. Just seen some heartbreaks and whatnot. So.
And we make it so easy. There's online applications for us, all of us here at People's Mortgage, take phone calls nights, weekends, during the business days. So we try to make it as easy as possible for anybody that's looking.
That's awesome. What is your website if they wanted to go get pre-approved?
It's hartz.loans.peoplesmortgage.com. So that's kind of long. It's hartz.loans.peoples with an S mortgage.com.
Awesome. Well, I think we kind of touched on a lot of the myths out there. Is there anything that you can think of that I didn't bring up that you've seen as a lender that people might be misconceived with?
I think that the biggest thing is taking that step to get the pre-approval. I think a lot of people are scared or nervous or don't want to know what their bottom line is or what their credit is. But it's so important to look. And if the credit score is lower, it doesn't mean you can't buy a house. It means we might have to take a couple steps to get you there, or we look into some programs that allow a lower credit score. So there's so many options out there, and to just not be discouraged, to at least try.
Awesome. Well, and I did want to touch on the interest rates a little bit because they are amazing. They've actually gone down recently, I think.
They have.
So what are we kind of sitting at right now? I know it can change daily.
Right,
so.
well, it can change daily,
Yeah.
and everything plays into the interest rate, and that's maybe something else we should touch on.
Yeah, I agree.
Interest rates are based off of credit, debt to income, your credit history, I guess the length of your credit, how much you're putting down, the dollar amount for your loan. So there's so many different things that go into an interest rate. But I would say, gosh, I mean, I've seen, well, with NIFA, I mean, they're down to 3.625.
Wow, that's awesome.
Yeah, I'm still seeing 4.25, even for conventional financing for a 30-year mortgage. So that's huge.
Very, very good, especially compared to kind of what we were hearing last year, that we'd be at 5 and 6% this year. I know I was hearing that a lot last year.
Right, there was a big scare that the rates were going to go up this year, but feds have already canceled all of their future meetings, and so it's going to fluctuate a little bit, but it shouldn't be anything too drastic.
Great. And you mentioned the NIFA program. Can you tell us a little bit more about that program?
Yeah, so NIFA is a great program for first-time home buyers, for somebody that hasn't bought or hasn't owned a home for 3 years. So there's also that.
Right.
But NIFA has just a lower interest rate to get into a program for buying a house. They also have a down payment assistance program. So as long as you have $1,000 of your own funds to contribute to the loan, you can borrow up to 5% of the purchase price. So that is huge for your down payment and closing costs.
Oh, absolutely.
Yeah.
Is that based on income or anything?
Credit score and income.
Okay.
Yep. So we have to have a minimum of 640 credit score
Okay.
to get in, and there are income limit caps based on the number of people that are living in the home and that are working.
Okay. Is there a limit on the price of home they can purchase with the NIFA program?
It is based off of the loan type.
Okay. Gotcha. Well, I'm just gonna see if we have any questions here. Oh, we got some people watching. Hey guys. All right. Well, I have a voicemail. Okay. Awesome.
All right.
Well, if anyone has any questions, feel free to reach out. You can comment on the post. You can reach out to me, to Holly. We're happy to answer any questions. And I just wanted to say thank you so much for being here today. Absolutely. It was a real pleasure, and I know I've learned some stuff today, and hopefully you guys got some good information out of it too.
Perfect. And we can put our contact information in the comments.
Yep, absolutely.
Awesome.
Yep. We'll put her website and both of our numbers. Is that your phone?
Yes.
We'll put our information in the comments for you guys. Thanks for tuning in.
Thank you.
Have a
great
wonderful
day.
Thursday.
Should have cited.